Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday, the 26th of March. My name is Russell Shaw. I'm a senior market specialist at FXCM. And just before we get into the live stream, I'm going to go ahead and bring up our disclaimers. And we'll start off with the high risk investment warning. I'll keep this on screen for a few moments. If you can just have a read through that, it'd be much appreciated. Hey Raj, good morning to you and welcome. Nice to have you on the live stream. Okay, let's just bring up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. Okay, just another few seconds. Okay, excellent. And here we go. Let's start off with the real rate. Continuation of yesterday's analysis. Real rate is the top chart, and the US dollar is the bottom chart. Some sort of divergence between the two. By and large, they are positively correlated. You can see that the real rate seems to be approaching the lower boundary of perhaps a flag pattern. We're waiting just to see if the US dollar comes down as well. I would expect that if the real rate does move down, it should bring the US dollar with it. The reason being that yield is a key driver of US dollar valuation, right? It's quite interesting. Yesterday, if we take a look at the daily chart on the US dollar, okay, I'm just sharing the tab now. It's in zone one. All right, it's in zone one. And the stochastic for the US dollar is moving above 70. So there's a strong positive momentum. So what we were looking for yesterday is perhaps a dip in the uptrend in the US dollar. Didn't really manifest yesterday. I'm just going to go down to the hourly chart and we'll just do a debrief on the hourly US dollar. Okay, so here is the hourly chart, and then what we did, we looked at what looked like may have potentially been a positive cross on the EMAs. So we want to wait for the signal. Of course, we have to be patient. We have to wait for the signal to materialize. And we already had the stochastic, which had moved positive, but the second trigger never came. Dollar carried on moving lower. Okay, so we just didn't get the cooperation from the short-term traders. What we do have now is, of course, the fact that the stochastic has triggered. So the stochastic is moving upwards. So there is a positive divergence here. Let me show you what I'm talking about. You've got a stochastic that's moving up. I'm just going to make this red. Okay, so the stochastic moving up, and you've got the US dollar moving down. So you've got a divergence in the with the indicator and the price. Now, when George Lane derived the stochastic, he did suggest that the divergences were the primary signal. If that's the case, we would need to see the EMAs cross over as well. So remember, it's a dual trigger system. We can't act on one trigger. And even if we get the two triggers, then we've got to wait for the momentum. And the momentum is suggested when the stochastic moves either to the upper quintile or to the lower quintile. So we just want to keep an eye on US dollar. Hey Kim, good morning to you. Again, just to reiterate, dollar is in zone 1. The daily momentum is strong as long as we stay in the upper part of the stochastic, as we did over here. The probabilities favor an upward movement. Okay, as long as we stay in the upper part of the stochastic, then we have strong momentum. To short when you have strong momentum is a high risk strategy. It's a high risk strategy. We've got a positive momentum here. If there's a positive momentum, we just want to see if we get the shorter term traders to cooperate with it. If the shorter term traders cooperate, then we can piggyback off of them and try catch a dip in the uptrend. Okay, now the next chart I want to show you is the S&P 500. Again, the idea here is, here's the weekly S&P 500. We are overbought. We are overbought. Okay, and because we're overbought, one would be thinking that maybe we should be taking a short position. I'm not convinced by that argument. Take a look again at the stochastic. We've got a high momentum environment. The stochastic here is just super strong in the upper quintile, and to short into momentum is high risk strategy. Chances are you're going to get burnt. What we can say here is if there is disappointing data that comes out, disappointing data that would suggest that inflation is not coming down, growth is coming down, that we won't get 3 rate cuts, or that we're losing perhaps the AI narrative. Any one of those 4 variables gets compromised, we're likely going to get the normalization in the RSI. But, that's an if scenario. At the moment, the momentum is just too strong to be taking a contra position here, even though we are overbought. So I just wanted to show you the S&P 500 momentum is very, very strong. Okay. What I thought we would do today is also just take a look at some of the commodities. We haven't taken a look at commodities for some time. So what we'll do is a top-down analysis. I want to start off with copper. Copper actually has the nickname, so to speak, of Dr. Copper. In other words, some market participants view copper as a key economic indicator. The reason for that is that copper is used in many industrial processes, and if there is a demand for copper, that seems to suggest that industry is doing okay. Well, let's see what Dr. Copper may be sharing with us. So let's take a look at the weekly chart of copper. And what we have here is candlesticks that are above the 30-week exponential moving average. Which direction is the 30-week exponential moving average? It's pointing in that northeast direction. Where is the RSI? The RSI is above 50. So there does seem to be an underlying bullish momentum on the weekly chart, even though the last 2 weeks has seen some pressure on copper. It seems to be perhaps a pullback, and I wonder if this pullback is something that can be. We can see if copper has a perhaps a dip in the uptrend type of scenario. Let's go through to the daily chart on copper. So copper is a commodity. Kim, we did do the analysis of the CRB index with the commodity currencies, and there does seem to be a correlation. Bear in mind that correlation doesn't have to be one-on-one, okay? But one would expect that the commodity cycle would influence the commodity currencies. Okay, so we can take a look at Aussie as well. Let's just take a look at copper on the daily chart here. Is there anything that we can potentially glean? Okay, so it has moved into the neutral area. Okay, so there has been some sort of relative weakness. It's moved from zone 1 into zone 2. What we can do is perhaps just see if there is a support over here, and you can see that the RSI is pulling back towards 50 and the stochastic is dropping down. So copper seems to be losing some sort of momentum. If the RSI drops below 50, then the relative weakness, I think, is probably something we should pay attention to. The idea here is that Dr. Copper seems to be suggesting positivity on a long-term basis. We just need to see that reassert. Okay, we just need to see that reassert. It's pulled back somewhat. If it continues to pull back, that may be an economic signal. So perhaps just give an idea, get an idea of the direction that copper is being pulled towards. Another one we haven't looked at in a while is crude. Let's take a look at WTI. So I'm just going to bring up US oil. Okay, let's just get rid of all the drawings. We haven't looked at this in a while. Where is WTI relative to its 30-week moving average? It's above its 30-week moving average. Which direction is the 30-week moving average? It's starting to move in that northeasterly direction. Where is the RSI? It's above 50. So on a weekly basis, we do seem to have support, okay, for energy. Let's go down to the daily chart. Let's take a look here. All right. Here is US oil. Okay. It's in the top zone, zone 1. That's the bullish area. We have got a strong looking RSI that is above 50, and the stochastic is in the upper range. So there does seem to be some sort of support for WTI. Let's just go down to the hourly chart, see what the hourly chart is telling us. And what we would need to do is we would need to see the shorter term oil traders cooperate with the longer term charts. So we would want to see a crossover to the upside on the EMA. We would also want to see a crossover to the upside on the stochastic. So perhaps some sort of dip in the uptrend here. Okay. Kim just asking us to take a look at Australian dollar, perhaps to copper. What we can do is just take a look at AUD USD. All right. AUD USD on a weekly basis is actually looking quite weak. And what we can do is we can put in our peaks and troughs here. You can see that we can put in a reference peak over there. We can put in a reference trough over here. And you've got a lower peak here. And what the next step could be, if it takes out the trough over here, we'll have a lower trough. Well, that means Aussie is going into downtrend. So I think it's looking quite soft here, actually. What we can do, in fact, is instead of taking a look at the correlation between, say, Aussie and copper, I think it would be much more useful to take a look at the correlation between the Aussie, perhaps the Aussie 2-year and the US 2-year spread. Let's just see if we can bring that in underneath. So let's put in AUO2Y. Okay, and what I'm going to do is I'm going to subtract the US 2-year, and the US 2-year and the Aussie 2-year are good proxies for monetary policy. So let's just see which central bank seems to be the stronger between the two. Aussie perhaps is looking a little undervalued here. Let's just take a look at the 10-year. See if perhaps the longer term flows have more impact. Okay, I beg your pardon. Here's the chart. All right. Sorry about that, Kim. So we've got here the Aussie in the top, and we've got the spread between the Aussie 10-year and the US 10-year. And on the Aussie, we've got a peak, trough, lower peak over here. And you can actually see that the spread is moving down. Okay. So the longer term flows, when we're taking a look at the Aussie 10-year and the US 10-year, and we're looking at the spread, there does seem to be some sort of downwards pressure there. Let's just go back to the Aussie. Okay, peak, trough, lower peak, and I think that if it drops below that trough, we're going to go into downtrend. You can already see that the weekly RSI is below 50. Let's just take a look at Aussie on a daily basis. Okay, and there's just no real sort of trend there. It's not one that is showing signs of trend on the daily. For the most part, we've spent since February just in zone 2-year. It's not a currency pair that sort of jumps out. It's not one that I think. So you want to trade trends, right? You don't want to trade static charts. It's going to make your life much more difficult for you. It seems that this Aussie here not really conducive to trading. All right, let's take a look at GBP USD. Again, it's right on this 30-week exponential moving average. Gee, I don't know if this is going to be something that we can trade either. Let's just go through to the daily chart, and then we'll take a look at Euro after this. All right, at least it's on the it's in a zone. It's in zone 3, and what we do have here is the daily momentum moving into sort of the lower quartile. Let's go through to the cable. Let's go through to the cable hourly chart just to see if that's giving us any signals. Okay, I beg your pardon. Here we go. We've got cable in zone 3, stochastic moving down to the lower quartile. So let's see if there's some sort of rally in an uptrend we can take advantage of. They're just going down to the hourly chart. Okay, and what we would need is we would need the triggers. We would need the EMAs to roll over. We would need stochastic to roll over. And then what we would need is for the cable chart to move through to the lower quintile, and then we would have some sort of momentum. And that would bring us into synchronization with the daily chart, which is in zone 3, and with the momentum going into the lower quintile. Let's just take a look at euro as well, see perhaps if that's lining up. Okay, so euro also in zone 3, and just take a look at the stochastic. It's moving into the lower quintile, and if we go into the lower quintile and we hold in the lower quintile, as we do, then we will get a likely swing down. So we maybe at the beginning of euro US dollar swing, let's just go see the hourly chart and see if there are some sort of crossovers that we can take advantage of. Okay, so we look as if we're about to get a cross down in the euro. The stochastic has already crossed down. So if we get a cross down in the euro EMAs, and the stochastic starts making its way to the lower quintile, okay, then we are lining up with the daily chart. Okay, then the daily chart here starting to show some influence over the lower time frame. Let's just take a look at one more. Let's take a look and see what's happening on DAX just to start the day. All right, so DAX is overbooked as well, but we've got a very strong momentum there. So to short into momentum, I just don't think that is a way to approach the market. If we just take a look at the hourly chart here, okay, it does actually look as if the hourly chart's rolling over here. If we get a movement to the northeast, and if we get the stochastic moving back into the upper quintile, then we would have a risk on day. Just bear in mind we are overbought on the DAX. Okay, that's as far as we'll go today. If there's any comments, just go ahead and type those in. Otherwise, what we'll do is we would conclude at this point, and we will pick it up again tomorrow morning. Thank you very much, guys.